Hey YouTube, so I'm going to make another video. I've been researching all afternoon and I think I've figured out the best strategy I should use now. So what I'm going to do is I'm going to sell 15,000 government bonds for about almost $15,000, maybe $14,800 or $900. The reason why I'm doing this is because even if I hold these bonds until March 1st, my return is about $675 because the interest rate is 4.5%. The yield is 4.5%. So what I'm gonna do with this $15,000 instead is, so after I sell 15,000 government bonds, then I will sell two November 3rd expiry $71 strike price put options for shop.to, so for shop. And so the theoretical price is $413 per contract. So if I sell two of them, I make $826 and it expires in 15 days. So I make $826 in 15 days, which is more than the $675 that I would make if I hold the government bonds for 4 months, because it expires on March 1st, so that's 4 months. So I could either make $675 in 4 months, or I can make $826 in 15 days. So obviously this is better, so you know. So me holding the government bonds is an opportunity cost that is not worth it. So I would rather use the $15,000 to sell Shopify put options. So what is going to happen? I need to have $14,200 in my account in cash in order to do this, because I need to. It has to be a cash secured put. So two put options means that I have the obligation to buy 200 Shopify stock shares if it is put to me, and at a strike price of $71, which is $14,200. And the reason why I have confidence in Shopify, so first of all, there's only two possibilities. One possibility is that the put option buyer doesn't force me to buy, so then I get $826 for doing absolutely nothing, for selling the put option, for doing absolutely nothing basically. And then the second option is I get forced to buy 200 shares of Shopify. So obviously there is a risk that I'm forced to buy 200 shares of Shopify at $71. So if the price of Shopify is less than $71, then I have an unrealized loss. Like obviously, as long as I don't sell it, as long as I don't sell it for a loss, then I don't actually lose money, but it will be an unrealized loss. The reason why I don't think this will happen is because if if I look at the long-term trend for Shopify, it seems to be a diagonal trending upwards, and then there's low points, and then there's low points. So these are low points, and then these are low points, and then these are high points, and these are high points. So I think that right now it is at the bottom of the channel, because the channel goes from about here down here up to here. So on the 6-month graph it looks more obvious. So I think right now it's at a low, and then it's gonna go for a high. So I think even if I wasn't going to sell the put options, I would buy Shopify at this point, because I expected this to be the low point, and I expect the stock to rise in price. And if I look at the long-term trend, it's clearly rising. So even if I wasn't selling the put options, I would still buy Shopify stock at this price, because I expect it to rise. And so yeah, that's why I'm doing this. And there's a few other options. So Shopify I think is the best. There's also CLS and BTO. Obviously I already sold 4 BTO call options for $400, and I'm holding 400 shares of BTO, and it has a 4.5% dividend, so that's good. But I'm not going to sell any more BTO options, because CLS and SHOP have higher implied volatility, and the price of an option, the option premium, it depends on the implied volatility. So the higher the implied volatility, the higher the premium. So if I'm selling it, then I make the premium. So the higher the premium, the more money I make. So I'll look at CLS. I'll just show you CLS and why it's not as good as Shopify. Well, I can just say it. So basically, the reason why CLS is not as good as Shop is because it doesn't have a 15-day contract. So the shortest contract is 30 days, and the price ratio is about the same. So if I was, and I don't think the CLS graph looks as good either, because if I look at CLS, so in terms of the long term, because obviously all of these stocks I'm planning to theoretically hold them forever. So it's gone up, 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 up. So in the long term, it's definitely going up. The question is, would I buy it at the price that it is now? And it's hard to say. It doesn't really have like a low to high sort of channel like Shopify does. It sort of just goes up smoothly. So it is, I would say, it's sort of arguable. Like it's arguable whether if I was gonna diversify, I would buy both CLS and Shop, because CLS does look good, and then its volatility is about the same, 74%. See if I look at CLS, it doesn't. So the shortest contract is 29 days. So, and then has a theoretical price of $2.93, which is okay, but So it's half the price of Shop. So if I double that, so then I'm getting less than $6 over 30 days. So then it's less than $3 over 15 days. So Shopify has a higher premium. But anyway, so oh yeah, there's one other thing that I want to show. So the call option price is $2.93. The put option price is $3.01. So if the call option price is much higher than the put option price, then it means that everybody expects the stock to rise in price. And then if the put option price is much higher than the call option price, then everybody expects the stock to fall in price. So for CLS, put option is slightly more expensive than the call option by about 10 cents. So I would say everybody expects the stock price to stay roughly the same as it is now. And then if I look at Shopify, call option $4.38, put option $4.13. So the call option is slightly more expensive than the put option, but not by much. So everybody expects the stock to stay roughly the same price as it is, which is good, because that means that if I was forced to buy Shopify for $71 per share at the strike price, it will be worth about $71. So I don't expect to lose money. Obviously, if it's lower, then I can wait for the price to rise back up, because it's a stock, so it's never going to expire. So I can hold on to it forever if I want to, because I expect it to grow in value in the long run. Although it's a little bit hard to say if I look at the financials for Shopify. So the income is negative, so the income for last year was negative. So that's a little bit concerning. And then so the net assets, the total assets, I think they had to sell $3 billion in assets to cover their losses. But I think this quarter, I mean for this year, every quarter seems to be okay. I think it's taking a slight loss. So I don't know, maybe looking at the financials, then CLS might be more attractive. It's hard to say, because if I look at the financials for CLS, the income is very steady. Well, the income is very small compared to the revenue, but the point is it's pretty steady. And the balance sheet, I think the net assets are increasing. So it's hard to say. CLS is definitely looks better on paper in terms of the financial statement, in terms of the financials, but I could also compare the PE ratio, but I don't think CLS and Shop are in the same sector, so I don't think I could compare them. I could compare the PE ratios because that sort of depends on the industry sector, but okay, Shopify does not have a PE ratio. Oh, because it's negative. Okay, the PE ratio is negative because it's not earning any money. But for whatever reason, the stock is still rising in price. So, I don't really know how to think about this. Because from the financials, Shop seems to be in trouble. But from the graph, it seems to be doing okay. So I'm not entirely sure what decision to make right now, but CLS is definitely safer. But anyway, so I don't have to decide now, but anyway, so Shopify. So what would happen? So here's what my profit would be per year. So 365 days divided by 15 days, so 24, and then times $4.13. So that means that I can sell the 15-day put option 24 times in 1 year, and each time I make $4. So I make about $100 per year, and the price of the stock is $71. So I get about over a 100% return on investment if I use this option trading strategy. So the only question is, should I invest in Shopify or should I invest in CLS? Because looking at the returns, it's good, but looking at the financials, it's not good. But CLS clearly is good, both on its stock chart and also on its financial balance sheet. That is an open question. CLS is definitely preferable because it's much safer, but Shop has a higher return, so it's I don't know. I think I'll just end this recording here because this is sort of an open question. But if I didn't want to take any risk, then I would buy CLS. But I think I would have to read more about Shop to see if it really is in trouble financially. So I'm going to end this video here.